everyone. Chris Martinson of Peak Prosperity. I'm here with an update for you. Boy, hey, it's March 11th, 2019. March 10th, yesterday, Sunday, we had the Federal Reserve come out. The Oracle people came out from their temple and they spoke to the common people on 60 Minutes. And boy, we got a little bit to talk to you about there. Before we go into that, at Peak Prosperity, we are discussing the Green New Deal. There's a lot of things we're not entirely for it. We think it's aspirational. There's a lot of details in there. There's some things we're really for, though, not the least of which is opening up conversations that have to happen. So I'm going to open up another conversation for you today, and it's based on these three people. And you're going to see a smile on my face today because otherwise I have to take this as tragedy. I'm going to pursue this as comedy today because I don't know what else to do. So the Federal Reserve, I gotta tell you, they're saying stuff that is just absolutely nonsensical. They were on 60 Minutes last night. Interviewer Scott Pelley was just lobbing these softballs. Every so often he'd put a little tiny English on, but he didn't ask any of the questions that I might ask or that you might ask, right? Just completely bypassed all those and just, how great's the economy doing and all of that stuff. So that's why the Federal Reserve, I'm thinking of these people as the three Stooges now. We'll call them the Fed Stooges there, right? So yeah, Larry, Moe, and Curly. Let's get into it right now. I can't wait to share this with you. I can't go through everything that was talked about yesterday, but I will get to a couple of things just to show you what a comedy this has all turned into. So let's start here. Let's start with this particular quote. I have to read this now. This Scott Pelley says, "Have you stopped raising rates?" It's a great 20 question sort of thing. Jerome Powell says, "Well, that's a good question. We see the economy is in a good place. We think the outlook's favorable. Inflation is muted." Ah, there's that comedy. "And our policy rate, we think, is in an appropriate place. So what we've said is that we would be patient." Really? All right. Well, I have another view on why they got patient all of a sudden. Remember, the Fed was raising rates because they're way behind the curve. They've got to raise rates before the next recession comes, and which is probably already here. And so what did they do? Here's why they got patient. Take a look at this stuff right here, right? They were all about raising rates, and then, something scary happened, which is stocks actually went down instead of just up. They've been going up, 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 up for 10 years, and that's been great for the Davos crowd, the 1%, the super wealthy. Hasn't been so good for the average person, but it doesn't matter because the Fed doesn't work for you, the average person. They work for the holders of these things, stocks. So they got a little scared, and now they're patient all of a sudden when stocks are at an all-time high, close to a very, very close to an all-time high, right? We're right back up there. So what should the follow-up question have been in this case is like, patient. Why are you patient? You were all in a hurry to raise stuff just in December. Stocks went down for a little bit. Now they're back up near their all-time highs, and you're telling me everything's awesome. What are you being patient about? Patient, what are you waiting for, right? No good answer for that question, because what they're really waiting for is for stocks never to go down again, and that's where we're at. So let's keep moving. Check out this. Today, the stock markets in the United States, the indices all just exploded higher with the NASDAQ, the S&P, the Russell 2000, the Dow Jones, all exploding higher today on the basis of what? Well, because the Federal Reserve spoke last night. And I got to tell you, these people who are our leaders these days, they might have really giant egos, but they're also kind of fragile. And so what happened here was what often happens after the Oracle of Delphi comes on out of the temple and speaks to the common folks. We had what we call a substantiation rally. That's right, something that's meant to substantiate their words and show that they can write the articles now in the Wall Street Journal and elsewhere. They say, "Oh, market participants cheered what Jerome Powell said yesterday. Very soothing. They took great comfort," as if this was anything other than the powers that be throwing a bunch of money into the markets to create their substantiation rally. That's how I see it. I've seen it too many times. If it looks like a duck, walks like a duck, quacks like a duck, hey, it might be a duck, right? So these markets are a joke at this point in time. They are merely meant to provide window dressing for the powers that be to continue to pat themselves on the back and say, "Aren't we doing a great job? Hey, look, the market approves." Right? So let's keep moving. Here, let's get into the details of why this is comedy, what came out last night. Here's just one of many examples. I'll pull this one up. So Scott Pelley asks, a record 7 million Americans have fallen behind on their car payments. Never happened before. What do you make of that? one of the few questions with a little English on it, but that's still a softball, like, here you go, answer an easy one, right? And Powell says, well, car sales have been quite high for a number of years, so the whole body of outstanding loans is much larger than it was. So it's just saying, oh, you see record numbers of people behind on their car loans? That's just because there's more loans, right? Well, let's take a quick peek at that. Uh-oh, Jerome, here's the data. This is car sales over many years. You see that going in there from 2006 onward. Yeah, they dipped for a little while there, but if we're having record numbers of people defaulting on their car loans, it's not because we have record car sales or anything like that. These are kind of ordinary for the past decade. They're kind of at the same level. So much for that idea. Well, let's go on to the next piece of this then. Maybe if we look at, this is Federal Reserve's own data. This is from the own New York Federal Reserve. This is their own data pack looking at the delinquencies by types of loans. Hey, maybe it's just more people going into delinquency, right? That could be, and that's not an awesome thing. That's not just like, well, you have to understand there's just more of these loans out there, right? So looking at all these different loan types you see on the charts right there, let's take a look at just a couple of them. Ooh, look at student loans. They are now defaulting at a higher rate than at any time, including the depths of the Great Recession there in 2009. Now, this is a rate. This means that a larger percentage of these loans are now in default, and that's just been climbing on and on and on. Hey, Scott Pelley of 60 Minutes, you know what would have been awesome? If you asked a question about student loans. That would be a great thing, but you didn't. You asked about auto loans. Okay, well, let's go there for a second. This is auto loans. The default rate on these is climbing, right? So this is a rate again. It's not quite as bad as it was at the depths of the Great Recession, but it's getting darned close. So we have more loans and more of them are going bad. That combines to a record number of auto loans in default, right? Or 90 days late, depending on how you want to term that. Well, okay, so Jerome Powell just came forward and just basically gave us a non-answer on that thing. But here's the second part. This is where tragedy, comedy, they kind of weave together on this next bit. Let's take a quick peek at this. He says, this was the second part of his answer on the auto loans. He said, I think it also shows that not everyone, is experiencing this widespread prosperity we have. And that's something we pay attention to as well. Oh boy. All right, Jerome, this widespread prosperity we have, right? Let's be really clear. You head up an organization that printed trillions of dollars and shoved it into financial assets, where it primarily went to the ultra wealthy people who already owned those financial assets. This isn't really hard. I put this out in the crash course in 2008, right? If you take money and you print it and you shove it into a crevice of the market, the people who feast on that first get it first, right? If you shove it into financial assets, people who own those get wealthier. So let's take a quick peek at this widespread prosperity. By the way, widespread here, what does this mean? This means found or distributed over a large number of people. That's widespread, found or distributed over a large number of people. So let's take a quick peek now. Here's that widespread prosperity. This is a chart here that's taking a look at the wealth, not the income, but the wealth. An income chart looks much the same. This is the wealth of the United States divided up by 10% units. So the bottom 10%, the next 20%, all the way on out, except at the very far end of that chart, right? What you're seeing there at the far end there is that's just the 1%. So they had to break out the 1% as a special category in this. And let's take a quick peek. That 1% has 40% of the wealth. And this, great chart, great presentation by Big Thing. It's good stuff. This chart's a few years old, so it's only gotten worse. It's gotten worse since this widespread prosperity started breaking out all over the United States. Thanks, Jerome, right? The 40% of the wealth belongs to the 1%. And I guess what he meant was if we spread this widely, because 7% spread very widely belongs to the 80%, right? So 80% of the people own about 7% of the American dream. That is, it's collective financial wealth, mostly including real estate there too. But 1% owns 40%. So that's the widespread prosperity that Jerome Powell was talking about. Come on, 60 Minutes. This isn't hard data to come up with. You know, surprise him. Throw a hardball in there. Say, really, Jerome? I'm intrigued by this concept of widespread prosperity. By the way, your personal net worth is about 100 million, correct? Maybe you need to get out of the bubble you're in a little bit and wander around a tiny bit more, because the students, the young people, the elderly, the people on fixed incomes, everybody who isn't in the 1% getting crushed here. And by the way, that little thing you threw in there about inflation being low, pure comedy gold. You should get out to a grocery store, try a tuition bill, or see about renting an apartment in a major metro area. That would be awesome. And then we'll talk about your low inflation again. All right, moving on. That's Larry, Moe, and Curly. This is the Federal Reserve. This is what they've been up to. And it was just galling today to have to watch the markets cheer the sage words of our wise leaders. Listen, people, this couldn't be any more clear. The Federal Reserve has been creating a class war. That's what they do. And there can't be any bones about it at this point. The only thing that's really annoying in this story is that we have a press that can't even begin to formulate a reasonable or proper question. Here's one. Hey, Jerome Powell, what sort of a wealth and income gap would you find to be inappropriate? Is anything too large? Is there a final limit? Is the Fed finally saying, when the 1% owns 90% or 100%, where's the line? Do you have one? Because if you don't have one, maybe you should, right? That'd be a great set of questions. Or what do you think about sacrificing Gen X, the millennials, all the younger generations? What do you think about really sacrificing their opportunities so that we can continue this charade a little bit longer, right? I don't know. It just feels like there's just so many missed opportunities in this particular story. So 60 Minutes had a chance, whiffed, made it look they got great lighting, nice makeup, all that stuff. But boy, another opportunity missed. So with that, hey, I'll see you next time. And please come by Peak Prosperity. Check out what we're talking about there, about the Green New Deal. We have our own proposal for what we think would be an actionable, reasonable set of things that we should be doing at this moment in history. So with that, I will catch you next time.